Hello all, and thank you for joining us today. We are excited to have John Bria joining us today. John is the director of the client development at the CME Group, and he will be presenting an introduction to micro Bitcoin futures, which is a new contract offered by the CME Group that will be available for trading in just a few days. Before we get started with John's presentation, we would like to talk about how the CME Group and Tradovate work together. While today's webinar focuses on cryptocurrency futures at the CME and specifically the new micro Bitcoin contract, the CME Group offers a wide range of products that are available on Tradovate. We would encourage you to check out the CME Resource Center on the Tradovate website under the Knowledge tab. At the CME Resource Center, you can find heat maps, trading insights, and more. We also encourage you to visit the CME Group's website at cmegroup.com for a wealth of information on trading futures. All right, so before we get started, let's go over the standard disclaimer. Brokerage services are provided by Tradovate. Tradovate is a member of the NFA and registered with the CFTC. This is not an offer or solicitation for brokerage services or other products or services in any jurisdiction where Tradovate is not authorized to do business, or where such offer or solicitation would be contrary to local laws and regulations of that jurisdiction. Futures and options trading involves substantial risk of loss and is not suitable for all investors. Investors should understand the risk involved in trading and carefully consider whether such trading is suitable in light of their financial circumstances and resources. Past performance is not necessarily indicative of future results. All right, so after the presentation, we'll open up for questions, and you can submit them in advance for consideration, and then John and I would be happy to go over those. All right, now I'd like to present John Bria from the CME. Welcome, John.
Thank you, Bastian. Good morning, everybody. Thanks for tuning in today, and I want to give a big thanks to Tradovate for hosting this event. Tradovate is a valued partner to CME Group, and we're very appreciative for the opportunity to be here today to speak on the upcoming launch of our micro Bitcoin futures on Sunday night. We feel that the enormous growth and the popularity that cryptocurrency has experienced over the last few years is really positioning this launch to be a pretty big deal and a potential game changer for the market participants that come to CME Group to speculate and manage their risk. And we feel like this product presents itself to a whole variety of investors and traders. And we also think there is a big opportunity here for the active individual trading community, such as those that trade at Tradovate. So let's get into it. We also have a disclaimer here at CME Group where we want to acknowledge that futures are not suitable for all investors. These are leverage products that each involve the risk of loss. And so please do your research and ensure that you're properly educated on a new market or a new product before you go and trade that market or product. And if you're looking for any educational content, Bastian said it in his introduction, you can consult the Tradovate website. There is a CME Resource Center on their site that has a variety of futures information that you could take advantage of. You can also go to cmegroup.com, click on education, and there you'll find a whole library of educational content where you can comb through, and it's all free too. So please do the research, do your homework before going into any new markets. Okay, so let's take a look at the agenda. So we're going to split our time together today into 3 parts. In part 1, we're going to discuss crypto and the crypto futures background of CME Group. Part 2, we're going to talk about the futures fundamentals and the benefits that micro Bitcoin futures offer the trading community. And part 3, we're going to take a look at the specific benefits and some examples of how traders can use these micro Bitcoin futures contracts. So part 1. Bitcoin and Bitcoin futures. So what's the narrative? Why is a 170-year-old exchange launching a cryptocurrency futures contract? And one answer to that question is that CME Group wouldn't be where we are today if we did not embrace change and didn't embrace innovation. And we really depend on our partners, on our brokerage partners, but also our underlying trading customers to tell us where the demand is and where we need to go and look for innovation. So today, I think it's undeniable that we're in a very low interest rate environment. And there has been these massive monetary stimulus packages going out, and there's all this money that is sitting on the sideline looking to be put into work, right? So we have all this money to be looking to put into work, and we have these low yielding debt instruments. And so people have found opportunities in these new alternative asset classes, particularly Bitcoin. And the next bullet here is rapidly earning a reputation as digital gold. Gold isn't going away. Gold is an enormous market, and we're going to go over that in a couple slides. But what we're seeing is that Bitcoin is starting to take on some of the same characteristics as gold. Gold's been viewed as the safe haven asset for a very long time, but Bitcoin is starting to be looked at as an inflationary hedge. So Bitcoin is slowly creeping up on some of gold's market cap. And then here on the third bullet point, adoption by giant firms like Fidelity, BlackRock, Goldman, and other corporations such as Tesla or wealth management corporations that are offering cryptocurrency to their ultra high net worth individual clients as potential investment tools. So what we're seeing here is that Bitcoin is quickly becoming a mainstream product, and it's quickly seeping into our everyday lives, whether we acknowledge it or not. And then the underlying blockchain technology gaining widespread acceptance is a big component of Bitcoin and other cryptocurrencies surge over the last several years. If this blockchain technology achieves even a fraction of its expectations, it gives even more validation to all the cryptocurrencies, specifically Bitcoin, on which this cryptocurrency, on the technology that it's based on. And then astronomical returns in 2020 and 2021. I mean, the rise in Bitcoin's price this year has been unbelievable. I think as of this morning, Bitcoin's up 89% year to date. And so that action alone, that's attracting investors and traders into this asset class, right? And if you compare that price action with, or if you pair that price action with a regulated futures contract and the risk management mechanisms and the clearinghouse that CME Group offers, we think that those characteristics and this opportunity alone is going to attract a lot of investors and traders to this market, and a standardized futures contract can help those looking to speculate or manage risk, can help them achieve their goals. So let's take a look at where Bitcoin falls in terms of market cap. And this slide was put together back in January, so it's a little out of date. If we were to update it for the price appreciation in Bitcoin and Ethereum, all cryptocurrencies today have a market cap of almost $2 trillion. So when you compare that to all the USD in circulation, all the cryptocurrencies have almost the same market cap as all the USD in circulation. And they also has almost the same market cap as Apple, right? And so Bitcoin is about 50% of all the cryptocurrencies, has a market cap of almost 50%. So Bitcoin today, with its price being at a little over 54,000, has about a $1 trillion market cap. And then you'll see gold all the way to the left. Gold is still enormous. Gold still has this $10 trillion market cap, but it shows, what this slide shows is that Bitcoin and all the other cryptocurrencies have really experienced some incredible growth. And it's incredible to see how it's grown in such a short period of time. So here's some of the cryptocurrencies that make up that market cap. You'll see the top two are Bitcoin and Ethereum. And we offer products, the CME Group offers futures products on Bitcoin and Ethereum. And now we're going to offer third Bitcoin contract, which is the upcoming micro Bitcoin futures, which are launching on Sunday. All right, so let's talk about the evolution of cryptocurrency products at CME Group. So we began our foray into crypto back in 2016. And at that time, what we did was we created two different data sets. And we wanted to do this because we wanted to create transparency and provide some price normalization for Bitcoin. And so since there are a number of Bitcoin cash exchanges, there are a number of prices that one could go and see. They could see one cash exchange trading at Bitcoin trading at this price and another Bitcoin exchange trading at another price. And so we know that there's that price disparity out there. So we wanted to create a reference rate that takes all the different prices into account and creates an aggregate price, an average price. So back in 2016, what we did is we created a Bitcoin reference rate, which takes the trade flow from 5 major cash crypto exchanges, and it publishes it into an aggregate price that's published once a day at 4 p.m. London time. And so that's published on our website, and I'll show you the website or the web page in a couple of slides on where that's published. So we launched the Bitcoin reference rate back in 2016, and another product that we launched back then was the Bitcoin real-time index. And along the same lines, what we wanted to do was create transparency and an aggregate Bitcoin price that shows, so we took the global demand of the same 5 major Bitcoin spot exchanges, and we converted that data into a US dollar price, and that price is published on our website every second, and is published on the same page that we publish the Bitcoin reference rate. So that was our first foray into crypto back in 2016. And fast forward 1 year later, in 2017, we launched our current Bitcoin futures contracts. Those were launched in December of 2017, and those contracts consist of 5 Bitcoin. And that gives Bitcoin's price, at today's Bitcoin's price of over $54,000, this current Bitcoin futures contract that we have has over a notional value of over $270,000 today. And so as liquidity grew and as interest in Bitcoin and other cryptocurrencies grew, in 2018, you'll see here on the timeline that we created an Ethereum dollar reference rate. So we created a reference rate and a real-time index on Ethereum in 2018, similar to what we did for Bitcoin in 2016. In 2020, we launched Bitcoin options. So we have options on our current Bitcoin futures contracts. We launched those in 2020. And then earlier this year, February of 2021, we launched our Ether futures contracts. And so that contract has exposure to 50 Ether. So 50 Ether times the 2, I think Ether today is trading around 2,800. So that gives that Ether futures contract a notional value of almost $140,000 today. And then brings us to today, why we're all here today to talk about micro Bitcoin futures. These new products, again, will be launched this Sunday evening for Monday's trade date. The launch is Sunday, May 2nd at 6 p.m. Eastern time. So here's a little explanation. We already went over Bitcoin reference rate and real-time index. So these 2 slides go over that. Here's the web page. This is what our web page looks like, where you can go and find our Bitcoin reference rate and the Bitcoin real-time index. So if you go to cmegroup.com and just search Bitcoin reference rate or search Bitcoin real-time index, it's going to take you to this web page. And this is how it's displayed. And you can subscribe to these reference rate and real-time index if you'd like. And you can do so right through our webpage. So if these data points are of interest to you, go to cmegroup.com and you can subscribe to these. Okay, so let's take a look at how Bitcoin futures and the options on the Bitcoin futures have gotten us to this point today. So unsurprisingly, as we've seen prices for Bitcoin and Ethereum rise over the last 6 months to a year. We've also seen our average daily volume and our open interest in our Bitcoin contracts rise in parallel with that price. So in 2020, our Bitcoin contract traded almost 8,800 contracts a day, which was up, which was up 38% compared to 2019. And we had an average daily open interest of about 8,600 contracts. And in Q1 of this year, we're averaging almost 13,500 contracts a day. And with our current Bitcoin futures contract being 5 Bitcoin, that means that today in Q1 of 2021, we're averaging almost 67,500 Bitcoin equivalent being traded every day. And so if you look at the average daily open income, our open income has increased as well. Open interest has increased as well from 8,600 to 10,300, which has a Bitcoin equivalent to 51,000 Bitcoin. But what I want to highlight here, if you look all the way to the right-hand column under other highlights, what this is showing us, this information, is that this is a global story. This isn't just a domestic trading story. The Bitcoin futures and the options on the futures have seen volumes coming from 90 different countries on the future side and 15 different countries on the option side. So if you see 36% of our futures volume is coming from outside the United States, and 19% of our options volume is coming from outside the United States as well. So it's truly remarkable to see how this market has taken shape and how it's gone global now. So here's a graph depicting Bitcoin's parabolic price move over the past 6 months or so. And as we discussed earlier, Bitcoin's up almost 90% this year. So if you take a look at this price chart, it's almost jaw-dropping to see since September just that price move up. It's really astounding to watch and see. And so again, that price move isn't only in Bitcoin, it's also in Ethereum. So you see this graph that shows Ethereum's price take off right around the same time that Bitcoin's did back last fall of 2020. And I believe Ethereum or Ether on the year is up closer to 276%. So again, it's truly remarkable to watch the price action, see this whole cryptocurrency industry evolve. All right, so here's another graph of the growth of Bitcoin futures. We went over the growth in ADV, we went over the growth in open interest, but here's just a graphical representation that shows, as price increased in Bitcoin, so did the average daily volume, so did the open interest. And then here's a graphical representation showing that how our large open interest holders have grown over the past couple of years. And so this is dating back to April of 2018. And if we have an open interest holder that's holding at least 25 Bitcoin contracts, that has to be reported to the regulators. So what this is showing, back in December 2020, we peaked. Our large open interest holders surpassed over 100 different clients, right? So what is that telling us? That tells us that there is a large institutional interest that is coming to our markets to trade Bitcoin. So these products are permeating a bunch of different industries, and it's not just an active individual trader community that's coming to trade these products. Institutions are coming to trade these products as well. All right, so on this graph, you'll see that this is a breakdown of the competitive landscape. We're not the only exchange that offers derivatives on cryptocurrency, but we are the largest in terms of volume and open interest. So what this graph shows and what this data tells us is that if you're looking to trade Bitcoin or Ethereum futures or options on futures, market participants are predominantly coming to our markets and using our products to gain exposure or manage risk through our cryptocurrency futures and options. Okay, so let's get into part two. We're going to talk about futures fundamentals and the benefits that micro Bitcoin can offer. And going right into expiration, I know that many on the call know the basic fundamentals of futures, but what we want to highlight here is that the crypto futures don't act like the cash crypto products that are in circulation today. These are different. These are futures contracts. Whereas on a cash crypto product, you can buy into Bitcoin and you can just leave it in your account and let it sit there forever. On the future side, you can't do that because futures contracts, by definition, they have an expiration date. And so what we want to highlight here is that futures have expirations and we need to manage our positions going into expiration. So if you take a position on the micro Bitcoin future, a majority of the trading volume happens in that front month. And excuse me, the majority of the trading volume happens in that front month, and it starts to seep into the sequential months as you draw closer to those expiration dates. Right, so here on the right-hand side, you see the April Bitcoin future have a volume of 3,400 contracts. And then below that, you'll see the May contract have a volume of a little over 400 contracts, right? So again, once you're nearing expiration in a futures contract, specifically if you're holding a micro Bitcoin futures contract close to the expiration, the volume starts shifting from the front month into the next sequential month. And here's a graphical representation of that. So what we did is we took all the different expirations in our current Bitcoin contract, and we saw when the volume left the front month and started moving into the next sequential month. So if you take a look at that black line all the way to the left, that's the November expiration. So you'll see the volumes fluctuate from the beginning of November all the way toward the end of November going into December, right? And so these contracts expire on the last Friday of the contract month. So as we're approaching that last Friday of the contract month, you'll see the volume start leaving that November contract, right? You'll see the black line start plummeting down, and you'll see that blue line start increasing. So that's indicating that the volume is leaving that front month and starting to go into the December contract, the next sequential month. And so what we want to make sure there is that everybody realizes that these are futures contracts. They have expiration. They act like any other futures contract. And you want to manage your exposure as you're nearing the last trading day so you don't get caught in an illiquid market. Volume will move from that front month to the next sequential month as you're nearing expiration. So on this slide, what happens when futures expires? So there are two different types of futures. There's a physically settled future and there's a cash settled future. This is a cash settled future. On the physical side, if you were to take delivery on a bunch of corn, you would get, if you let your futures contract expire, you could potentially be taking delivery on a bunch of corn. But on the cash settled side, where the micro Bitcoin falls, these are settled on the last trading day against the Bitcoin reference rate. So if you were to allow your micro Bitcoin future to expire, the future will expire and the position will settle with a cash transaction based on the Bitcoin reference rate. So at the time of expiration, you let it go all the way. After it expires, the trader is no longer going to have a position or exposure to the Bitcoin contract. But if you want to maintain exposure to Bitcoin and you don't want to let your contract expire, you can roll your futures position. And so what we mean by rolling your futures position, say that you had a position in the April contract and you wanted to roll that position to maintain exposure going into May. So when you're nearing last trading day in April, what you'll do is you'll sell your April position and you'll simultaneously buy into the May position. And so right here, this is a snapshot of the Bitcoin order book and you'll see we have highlighted the spread market down here. And you'll see that the April-May spread has a bid offer of 51.79. So there are spread transactions that you can do, and there's market makers that come and quote these spread transactions near last trading day because they know people are going to be rolling. So we want them to be able to roll and find the liquidity that they're looking for. And so you want to be cognizant when you're holding a micro Bitcoin contract towards expiration, you want to be cognizant, do you want that contract to expire and cash settle and then reestablish the position later on or not? Or do you want to maintain that exposure and roll? So basic futures fundamentals. What this slide is showing is that sometimes there's a difference between the real-time index and the futures price. And why is that? It's because a futures contract by definition is a contract in which somebody is entering into an agreement to buy or sell something at a future date or time, right? And there's implied financing that goes into that. If you were to store corn or if you were to buy Bitcoin, there's a financing rate that's baked into the futures price, which accounts for a slight differential from our real-time index or in our futures price or from the spot corn price and the futures corn price. It happens in a variety of different, almost all of our futures products actually. So it's important to note that and realize that there isn't anything fishy going on the futures side. There is an implied financing rate that's baked into the futures price, which accounts for a small difference. Okay, so now getting specific to the micro Bitcoin contract and talking about how much is this new contract going to be worth. Our new micro Bitcoin contract will be worth 1/10 of 1 Bitcoin. So today Bitcoin is trading around $54,000. The micro Bitcoin contract will have a notional exposure of 5,400. So on this slide, it looks like we put it together when Bitcoin was trading at $63,000. If Bitcoin was trading at $63,000 at that time, a micro Bitcoin would have a value of 6,300. So remember, that's 1/10 of 1 Bitcoin. Or if you're looking at our large Bitcoin contract, it's 1/50th of our large Bitcoin contract because our large Bitcoin contract is made up of 5 Bitcoin. So what does margin mean in futures? So unlike stock, margin is on a futures contract, margin is a performance bond. And it is generally a percentage value of the notional that you will post in order to enter into that position. So it's different than futures or any on other cash markets where you don't have to borrow money to trade on margin. Futures margin's a little different. And then all the way to the right, can I short micro Bitcoin futures? Absolutely. That, in my opinion, is one of the most valuable benefits that futures offers. You can go short just as easy as you can go long on a futures contract, and you can do that with micro Bitcoin futures. If you're looking at the cash crypto landscape and some of the exchanges out there, it's not as easy to go short on Bitcoin, right? You have to find an exchange that offers that. Then you have to find a platform that you can do that on. With the micro Bitcoin futures, you can go short just as easy as you can go long. You just sell it instead of buy. All right, so specifically looking into some of the benefits that the Bitcoin futures offers, you can trade a slice of the Bitcoin futures. Remember, we have that large Bitcoin contract that consists of 5 Bitcoin. So this micro Bitcoin allows traders to come in and gain exposure at a lesser notional, which is 1/50th of our large contract. And then price discovery and transparency, this is a big one. So in our markets, if you were to pull up your Tradovate front end and you looked at the price of the micro Bitcoin contract, everyone's going to see the same price. And if you were to push the button to trade that contract, everybody is sending their order to the same matching engine and the same exchange. And if your order gets there first, you're going to win. You're going to get that order and that price that you're looking for. So we do have a regulated exchange. We have transparent pricing, and everybody sees the same price. There's no disparity. And then you can precisely scale your Bitcoin exposure. You can scale in and out. We're going to go over that in a couple slides. And then the last is capital efficiency in crypto. We talked about the margin on futures. So we believe that poses a significant advantage over the cash crypto space, because you can post margin to take a position in a micro Bitcoin futures contract. So it's a capital efficient way to trade cryptocurrency. Okay, so let's take a look at the contract specs. And I want to focus on the micro Bitcoin. You'll see our big Bitcoin over on the right. It's worth 5 Bitcoin, has a notional value of 5 times what the Bitcoin is trading at. And it has a tick value of $25 a contract. So let's take a look and spend some time on the micro Bitcoin. The contract size on the micro Bitcoin is 1/10 of one coin. The ticker on the micro Bitcoin is MBT. The notional value of, the micro Bitcoin is the cash price. So in this scenario, the cash was trading, or Bitcoin was trading at $59,000. When you multiply that by 1/10, by 0.1, you get a notional value of $5,900. The minimum price fluctuation in the micro Bitcoin is $5 per Bitcoin, or 50 cents a contract. So the tick value on this micro contract is 50 cents. And the trading hours are the same as all of our other products. The trading hours on micro Bitcoin will start Sunday night at 5 p.m. Central Time, and it will go until Friday at 4 p.m. Central Time. So these contracts don't trade over the weekend. These micro Bitcoin futures contracts trade like all of our other futures contracts. It's Sunday to Friday. And these micro Bitcoin contracts will be monthly contracts, and they will be listed for 6 consecutive months, including the nearest 2 Decembers. And again, these are cash settled products. So it's not a physically settled product. You will not get Bitcoin if you hold these contracts through expiration. It will settle to cash, and it settles to that Bitcoin reference date on the day of expiration. And the termination of trading is 4 p.m. London time on the last Friday of that contract month. All right, so let's quickly go over the Ether futures, because they're relatively new. We launched them back in February of this year. So our Ether futures that we have today, they're worth 50 Ether. The ticker on that is ETH. The trading hours are the same as micro Bitcoin and the large Bitcoin. It's Sunday to Friday, 5 p.m. to 4 p.m. They're monthly contracts, and these are financially settled as well. And these Ether contracts, they settle to the Ether dollar reference rate on the last day of trading. Okay, so let's talk about the margin on these new Bitcoin contracts, on the micro Bitcoin contracts. When you look at the margin requirement on our large Bitcoin contract, when we put this together, the margin on our large contract was almost $107,000. So when you take 1/50th of that margin requirement, when we put this together, the margin on the micro Bitcoin contract would be around $2,000. And again, these margin requirements change, or they can change with volatility, with price increase, and it's all subject to change by our clearinghouse, who manages all of our risk. So we can expect the micro Bitcoin contract to be 1/50th or around 1/50th of our large Bitcoin contract. And here's a look at an order book, right? So it shows the micro Bitcoin tick increments. Remember, this product ticks for $5 for each Bitcoin. So one tick one $5 tick is worth 50 cents per contract. And you'll see here, this is indicative of a tight market. You'll see the bid ask is 250 to 255. So what we're looking for here is, or what we're trying to show here is this is a tight market. This contract ticks in $5 per Bitcoin, but the dollar value per tick on this micro Bitcoin contract, being 1/10 of one coin, is 50 cents per contract. And then here's a quick look at the Bitcoin and Ether futures versus their cash counterparts, their spot products, right? So when you look at the futures products that we offer, there's no wallet requirement for trading Bitcoin, micro Bitcoin, or Ether futures. Where on the other side, on the cash side, there is a wallet requirement. Our products are leveraged, so there are capital efficiencies that are afforded when you're trading CME Group cryptocurrencies versus the cash. In terms of a regulated market, we are a regulated exchange, and the cash cryptocurrency, it's still in flux. So the regulation is still being worked out. So we don't know what that landscape is going to look like. There are some potential tax advantages that futures offers versus the cash. I'm not going to get too far into that, but futures adhere to the 1256 tax code, which allows futures profits to be taxed at a blended rate, which could be advantageous when you're looking at some short-term capital gains taxes. Our products are all centrally cleared by the CME Group clearinghouse. So we have centralized clearinghouse risk mitigation, whereas the cash markets, there are a bunch of different exchanges, and they're not all cleared in a central location. The CME Group has been in business for over 170 years, so we know what we're doing on the future side, whereas the spot market has been around for less than a decade. It's a relatively new market and a relatively new industry, so it's still taking shape. And then the ability to go short on the CME Group crypto futures is easy. It's just like any other futures contract. You can go short just as easy as you go long. You just sell the contract rather than buy. And then when you compare that to the spot market, it's not as easy to go short in that market when you compare them to ours. Okay, so another thing to keep in mind is that there are some transaction costs that are applicable on the cash side. And some of the exchanges that we've been monitoring, they charge a percentage exchange fee. So here's just one example and something to be cognizant of when you're looking or evaluating trading the cash crypto space, is that in this example, if you were to trade the equivalent of one micro Bitcoin contract on the cash side, if cash was trading at $62,000, you would want to purchase $6,200 worth of Bitcoin. And if that exchange had a transaction fee of around a 1.5, you would be charged $92 to place that trade. So your total cost to gain exposure to $6,200 worth of Bitcoin would be $6,292. So it's just something to be cognizant of, because fees can eat into your profits, right? So we want to just point that out. Okay, so let's take a look at trading micro Bitcoin futures and going into some scenarios that can play out if you were to trade these contracts. So here's an example of a trader that's bullish on Bitcoin. And this trader decides to go long. They want to buy some micro Bitcoin futures contracts on May 3rd, on Monday, right? So the cash, Bitcoin's trading at $59,000. So this trader wants to buy one May micro Bitcoin future on May 3rd. The notional value of that micro contract will be $5,900. The next day, May 4th, the price of Bitcoin has appreciated $2,000. So this trader wants to offset their position on May 4th. They want to sell their position. They're going to sell at $61,000. Their position now has a notional value of $6,100. So if they get filled, they sell their position at $6,100. They make a profit of $200. So here's a simplified example of how a bullish trader can express opinion on a micro Bitcoin futures contract. And then let's talk about scaling. So scaling in and out of our markets, and specifically with our micro products, has been a relatively new thing for the active individual trader community at CME Group ever since we launched our suite of micros. So we launched micro gold and micro currencies many years ago, but we launched our micro equities indexes back in May of 2019. And since that launch, what we've been seeing is that traders that were traditionally trading maybe one E-mini contract are now trading a handful of micro contracts. And so what we're seeing them do is scale in and out of positions with these smaller contracts. And we don't think that is unique to just the equity indexes or the gold or the silver. We think that it's going to be, it spans all of our micros. And we know that because what we see is the trading behavior. And so with our micro Bitcoin contract, if you wanted to scale in or out with our micro contracts, you can do that the same through micro Bitcoin as you do with the gold or the equities. So here's an example of a trader that goes long 5 micro Bitcoin around $5,600. And since they have 5 contracts, as price appreciates up to 57,000 and past that, they might take 3 off to lock in profits. So you take 3 off from your 5, you're still left with two lots on. So you're going to let your profits reach another price level. So in this scenario, this trader got out, sold 1 contract at around $58,000 and had one micro Bitcoin contract left. So it soared up to another close to 60,000 here, 58,800, and they sold that last contract. So that's scaling out of a position. So you can do that with these micro contracts if you're trading 2, 3, 4, or a handful of contracts, right? And just as you can scale out, you can scale in. So if this trader wanted to scale back in as price depreciated, they could put 1 lot on at 58. They could put another lot on or 2 lots on at 56, goes all the way down to 55. They might get back in at another 2 lots, establish another position of 5 micro Bitcoin. So these smaller contracts allow traders to scale in and out of their positions. Okay, so let's take a look at what the Bitcoin options implied volatility is telling us about the futures price, right? So implied volatility on the option side, we launched Bitcoin options back in 2020. And what have they told us since launch? And you'll see this graph right here. When we launched Bitcoin options, the implied volatility was around 60%. And then in March of that year, it spiked up to 180%. So what is that telling us? It's telling us that the options market thinks or is predicting that the futures price is going to fluctuate pretty substantially, right? So you see some volatility. It spikes all the way up to 180% back in March and April of 2020. Then it comes back down to earth. Hovers around that 60% level. Then it spikes back up in January of this year to almost 160%, and then back down. So if you take a look at that Bitcoin volatility and that daily price movement, and you rank that volatility, if you take a look at the 50th percentile, so when that volatility has an annualized rate of around 66%, one standard deviation move is almost 2,500 points. So that's 2,500 points. And if it's $5 a point or 5 Bitcoin a point, that means that it's a 50 tick move. So one standard deviation at the 50th percentile, the options pricing is pricing in a one standard deviation move of almost 2,500 points, which is 50 ticks. So that's a pretty volatile market. And so when you take a look at the Bitcoin implied volatility versus some of our other volatile products like gold, the E-mini S&P, the euro currency, nat gas, you'll see that the volatility in Bitcoin is greater than all of the other comparables, right? So where there's volatility, where there's price action, there's opportunity for traders and investors to come and capitalize on it. But remember, where there's opportunity and volatility, there's also risk. So we want to be cognizant of the risk that we have on. We want to always manage that risk appropriately. We don't want to overexpose ourselves. So this Bitcoin contract presents a ton of opportunity. With that opportunity comes risk that we need to be cognizant of and that we need to manage appropriately. So let's take a look at all the different segments and all the different market participants that are using our Bitcoin futures today that we think are going to use our micro Bitcoin futures as well, and how those different traders are using these products. So when you look at the pension funds, they're coming to us and they're trading cryptocurrency for asset allocation and diversification, but also to hedge some of their cash holdings. So these pension funds might be exposed in Bitcoin or Ethereum and coming to our markets to use our futures or our options on futures to hedge some of that exposure on the cash side. Hedge funds come to us to trade crypto for long short strategies, but also hedging as well if they're long the cash. Prop firms trade our crypto to market make and go long short. The retail active individual trading community uses our products to go long short. Also, they use them in combination with options. And we do afford some margin offset capability if you were to trade the futures, the crypto futures with the options, or the Ether futures with the Bitcoin futures. There are some margin offset capabilities that active traders are taking advantage of. So options traders are coming to us to trade long short, but also to write income strategies by writing options. And then we have Bitcoin miners coming to us to write hedge strategies or go long short. We have corporates using our products to hedge Bitcoin receivables, but also for treasury management. And so we're going to round out today's session with these two quotes. And what these, I'm not going to read them, but what they signify is that the ecosystem for cryptocurrency is growing, and this market is evolving. It's relatively new, but it's growing quickly, and it's seeping into our everyday lives. And pretty soon, I don't think it's too far-fetched to say that cryptocurrency might be front and center in how we do basic transactions, even buying lunch to mortgage to other financing methods. I think cryptocurrency is here for now. And then here's a screenshot of our micro Bitcoin futures page on cmegroup.com. If you go to cmegroup.com/at-micro Bitcoin, you can find more information about this product. It has a video on there. There's some more educational content. So please, I encourage everyone, if you're interested in this product, go to that website, take a look at some of the information that we have available and see if this product is right for you, or if you find it advantageous to some of your trading strategies. So with that, I'll wrap up and we can start the Q&A session.
All right, thank you very much, John, for that. That was very informative and very good. I think we learned a lot from you and what you discussed. So there's been a few questions that came through. Most of them were, I would say, probably more like practical type questions, and some of them you covered already, such as the margin requirements. So just to kind of clarify that, or just to, I guess, repeat what you said before, the actual margin requirement, we don't know exactly how much it's going to be, but it's going to be similar to the big Bitcoin divided by 50. Is that correct?
Correct. Yeah, it's going to be 1/50th of our current Bitcoin contract.
Okay. And just so so people know, we will be offering intraday 50% of that. So you'd be able to trade the micro Bitcoin with a half of the initial margin, and that's a 50th of the big Bitcoin contract. So that's going to be around just over $1,000 per contract, if I'm not mistaken, would be about half of the initial margin. Oh, there's another question that just came up. That's a good one. What are the limits for the micro Bitcoin? Limit up, limit down, or is that something that's known, or is that available on the contract specs CME website?
It's not available on the specs yet. I believe that it's going to be posted by the end of this week, but I don't have that information in front of me today.
Okay. So it would be good to just people to take a look at the CME contract specifications page for the micro Bitcoin, and that will be updated. Like you said, over the weekend, there'll be more information added, like margins and things like that.
Right. I expect by Friday's close or after Friday's close for all that information to be posted to the website.
Got it. Okay, that makes sense. So yeah, here a question on the commissions. This would be more of a Tradovate related question, so I'll answer that one. So it'll be the same as the other micro contracts. We have a 25-cent per side commission on those when you're on the default membership free pricing. So that's 25 cents in commission, plus there's a 2-penny NFA fee, a 9-cent clearing fee, and then there's the exchange fee. And John, if you could just remind me what the exchange fee is going to be for these.
The exchange fee on the micro Bitcoin contract will be $2.50 a side.
Okay, so $2.50 for the exchange fees, plus 25 cents commission, 9-cent clearing fee, and 2 cents NFA fee. That would be your total per side cost. Okay, let me see if there's anything else that came through. Oh yeah, and that was something that was interesting as well, was the expirations. So these are, I guess, if you know a little bit how the MES or the MNQ works, this is similar in that respect in terms of when the expiration is. That's the third Friday of the contract month, and you want to start rolling about a week before. Is that what is anticipated is going to happen?
Yeah. Is that a question to me?
Oh, sorry. Yeah, sorry about that. Yeah, so that's basically what's you're assuming that the liquidity is going to start dropping at like a week before the expiration, approximately.
Yeah, I think it's like any other contract. You have to take a look to see when that volume starts rolling. It kind of varies from contract to contract, but this contract's a monthly contract. The expiration, last trading day is the last Friday of the month. So I would be cognizant. I would start looking a week and a half before that last Friday to see, when that volume starts moving. Once you see it moving, I would move with it.
Okay. Yep. Thanks for that. I was mistaken. I thought it was a quarterly expiration, but no, it's monthly, and you basically want to trade every month. So in other words, you don't skip any months, right? The liquidity will just be the next contract month.
Correct. Liquidity. Okay. The volumes usually pool in that front month.
Gotcha. Okay, that makes a lot of sense. That keeps it simple as well. Okay, let me see if there's anything else that came through. Yeah, so trading hours would be what you're used to from the other equity indices in terms of the trading hours. And there's a 1 hour break between 5 p.m. and 6 p.m. Eastern time, 4 p.m., 5 p.m. Central. That is correct, right?
Yes, that's correct.
Okay.
That batch time is that 1 hour window each day is when we run our batch and send all the positions over to the FCMs.
Okay, makes sense. Okay. Yeah, it looks like that's all the questions here. So yeah, people can expect to be trading these the micro Bitcoin at the open. It's 6 p.m. Eastern time Sunday, 5 p.m. Central on this coming Sunday. And yeah, Tradovate should have everything up and running. Obviously, you never know with these new contracts, if something if there's an issue with getting the feed going or anything like that, we'll be trying to resolve that as quickly as possible. But that is the plan, to have this contract available at the launch. So I don't see any other questions, John. I'm not sure if there's anything else that comes to mind on your end. I think you've explained everything very well, and it's very clear. So I'm not thinking of anything that you missed during the presentation.
All right, great. Well, I'll share the deck. This deck can be distributed. So if anybody wants to take a look at this, I'm going to send it over to Bastian and team. And I really appreciate the time today. Thank you for having me.
Yeah, well, thank you so much for coming on and doing this. This has been great. And yeah, we're just hoping that it'll be a great success story like the micro E-mini S&P and NASDAQ and those contracts. So we're very excited, and hope everyone that was following this or watching this later on will be excited to see what's going to happen on Sunday. So thanks everybody for your time, for following along. And this will be recorded, so you'll be able to go on YouTube on our Tradovate page, and you'll be able to watch this again if you want to listen to this. But again, thanks everybody, and John, thank you especially for this. And I'm sure we'll be in touch again soon to do more of these presentations.
Great, thank you.
All right, thank you. Bye-bye.
Bye-bye.